so this is how the final short or at Frontier opening bell goes today, Friday, the 30th of July, and we're wrapping up the month with Luke Ofojebe, the head of equity and research analysis at Vetiva Capital Management. Thank you so much, Luke, for coming through. Let's chat with you to a few of the stories in our headlines today across the corridors of East, West, North, and Central Africa, with Nigeria coming through by 0.8% decline on the index yesterday as investors begin to, asset managers begin to adjust for portfolio. Despite the BUA cement a good earnings, the market, the price of the cement giant buckled by about 5%. And for the first time this week, on Thursday, we saw investors book profit on the shares of Owando, having rallied strongly since Monday. In BRVM, the market was positive. Egyptian market down by 0.25%. Thursday is the final trading day until Sunday. The Nairobi Bourse was back up by 0.5%, and the GSC much stronger, nearly 70% or 70,000 on the reading is now 69,565. Up by 1.5%, buoyed by the industrials and a bit of financials and resources index, with the good numbers coming through from some of the listed miners on the GSE. In East Africa, coffee producer EGAT has posted 1.75 million Kenya shillings in full year profit after tax. Base Resources has gotten its licenses for extraction by the Tanzanian authorities. And Credit Info is expanding its SMEs scorecard to Kenya and Tanzania. And here goes the IMF warning that cryptocurrency adoption an inadvisable shortcut. That comes from a new blog published by the IMF just a few days ago, asking central banks to be wary about the adoption of digital currencies in their domain. That's your story. Let's start from there, Luke.
Good morning, Bosin, and good morning, everyone, once again. So on this cryptocurrency issue, I mean, yes, you will understand that it's a digital currency, and it comes with the benefit of low transaction costs, and you can easily carry out cross-border transactions seamlessly at a faster pace, right? But when you look at other features of this particular kind of currency, this cryptocurrency, right? One of the things that come to the fore is the fact that transactions are not traceable, and that's one, and that's why cryptocurrencies can be used as means of laundering money, illegal funds, and the likes. So clearly, it can be used to finance crime, and that's not good for global social welfare. Secondly, we understand the fact that you need to have controls over currency transactions. Central bankers need to have controls over currency transactions. But for the case of cryptocurrency, it's completely decentralized. So there is no control over how it's being mined. There is no control over its supply. There is no control over how it's being distributed across the globe. So because of these major concerns, really, you can't really use it to, influence government spending, to influence monetary policy authorities. And when things, when you have a currency such as this, it means that you might see inflation rising at a rapid rate because everybody really wants to, get his or her own share of the currency, basically. And as demand continues to rise, inflation will continue to, skyrocket, and clearly that's not going to be sustainable. And thirdly, rather, you also need to mind the fact that when it comes to cryptocurrencies, it takes a great deal of energy to actually mine these currencies. I mean, I was reading an article a few months ago where the amount of energy that is required to actually mine cryptocurrencies is more than like 500% of what is required to produce our normal currencies, basically. So I mean, when you also consider the environmental impact this can have on the society too, I mean, clearly is not really the way to go, and it's not something that the world can actually adopt in the near term and in the long run.
Yeah, you're correct on a number of on all fronts, Luke, because quite a number of articles and reports and research reports are coming out left, right, and center I read something similar to what you just said finally on just a few days ago about why it is important to look at the energy being used to generate the cryptocurrencies, the issue of the scam and the spyware that is happening very rapidly in the US and all this. There are a whole lot of concerns about what this would mean for in terms of cybersecurity and all of that. But of course, it's still early days of cryptocurrency and digital adoption or currency adoption. So let's keep reading up and begin to learn where the world, financial markets and central bankers and governments will go in terms of this particular digital asset. Let's check in with Nigeria. And of course, it's been a very nail-biting week with the banks speaking to BDCs, or sorry, central bank asking banks to make sure there will be no holding of FX. There are no undue delays by customers who wants to get FX. They should make sure they have an e-alert system on customers' requests, just informing them and making sure that everything is all right. The banks themselves came out and said they support. The BDCs issued a statement late yesterday evening saying they agree with the central bank, but they will continue to source for FX from alternative sources and that they remain in business. They are not closing shops, that this is a wake-up call to them, about 6,000 of them, to keep remaining in business and be strategic in terms of their business. The whole horizon is just opening up. We also spoke with the Director of Monetary Policy of the Central Bank, Dr. Mahmoud, yesterday evening, and he spoke about that the fact that the central bank does not have what it takes to supply the FX need of the entire country. So autonomous sources or independent sources will still come into play. In the meantime, the central bank has asked those who have pending licenses for BDCs with the central bank to request for a refund and ask the banks not to accept deposit for anyone who wants to get a Bureau de Change operating licenses. I spoke about the BUA cement earlier. Look, that is on the street, as well as Lafarge. Looks that the cement companies are mining money as the cryptocurrencies. What do you think?
I mean, looking at Lafarge, Boasman's results, I mean, that was their results were really impressive, and that wasn't surprising to us at Vetiva. I mean, it was what we expected, basically. I mean, at the start of the year, um, we expected to see an increase in turnover for a number of these companies. That's going, and for us, we expect that to be driven by improvements in oil prices, basically. I mean, and since the start of the year, we've seen like a significant jump in oil prices, currently above pre-pandemic levels. So what that means is that government's oil revenue should improve significantly in 2021. And on that basis, it means that the government's ability to finance its budget, especially its capex budget, has been strengthened in 2021. So as a result of that, we should see more of capital projects. We should see more capital projects in 2021, and which means that there will be a stronger demand for cement in the country, and that's what has been driving revenue growth for a number of these countries. And more so, we've started seeing recoveries for some of these companies that have their businesses in some other African countries. Basically, last year was a tough one because of the pandemic, but this year, I mean, it's widely considered as the year of recovery, and we started seeing recoveries in a number of these African countries. So demand for cement in these countries has also improved, and that has also helped to support revenue performance for the industrial goods players. In the second half of the year, we expect to see a similar run anyway, but we expect the growth trajectory to slow down, given the fact that we've already started seeing rising borrowing costs. So that should slow down investments in the sector. But nonetheless, 2021 will be a very good year for a number of these um, industrial goods players.
Oh, give me your take on where we are with the FX story now. It looks like everybody's on the same page, the central bank, the banks, and the BDCs. Do you think we're now set for the new horizon?
Yeah, it's been interesting, really, when you look at what's happening in the FX space. Looking at what the monetary policy recently came up with, that's the ban on FX sales to BDCs, really. Um, I think the aim of the MPC really was to narrow the spread between the parallel market rates and the NAFEX rates. I mean, currently, in the parallel markets, you have the dollar trading at about 500 naira, whereas in the NAFEX markets, it's trading around 410 naira. Look at the widespread, a spread of about 19 naira. Clearly, that's not sustainable. If nothing is done about it, we might see that spread, widen further. So what the CBN is planning to do is, stop the sale of FX to BDCs, try to reduce supply of FX in the parallel market to the barest minimum, such that the pressure on naira in the parallel market will now be directed to the bank. So you can buy directly from the banks. There will be no more speculative trading. So if, for instance, the CBN is selling dollars to the banks at a rate of about 400, the bank will make a profit about maybe 3 naira or 5 naira thereabouts, and sell to consumers like you and myself at a rate of 405 naira. That way, we will see naira, trading at a stable rate, and this pressure we are seeing on the naira will actually drop significantly, and that will also help to reduce inflationary pressures, because for at the moment right now, even though we have the NAFEX window, there are some importers that they have limited access to that market, so they need to go to the parallel market to get dollars at about 500, then import at that particular cost, and that's why we're seeing rising inflation. But if you see this happen, where you can easily go to the bank to get dollars, I mean, that should help to reduce pressures on inflation. However, I need to mention that in the short term, we are going to see like a rapid jump in the parallel market, because what the CBN is trying to do is cut supply in the parallel markets, whereas in the official markets and supplying the banks with dollars, the banks having the necessary infrastructure to attend to customers. This is going to take a while. So pending that time, we might just continue to see pressure in the parallel market, but in the long run, we'll see the two rates coming much closer, and that will be good for the economy.
Thank you so much, Luke. We appreciate your views from Vetiva on this particular very important big story this week on the Nigerian front. Checking with the Southern African market very quickly as we move on, because Zimbabwe now expects its GDP to expand by 7.8% against 7.4%, which was previously forecast, and that's for this year, having dragged inflation down from 106.6% to 53% in the month of July. I would an outlook from the central bank in Harare that 25% is the target by the end of the year. That's going to be one of the historic decline of inflation in any economy anywhere in the world. And I said earlier that earnings from the mining companies helped the South African market finish very nicely. On Thursday, Anglo American first half market demands boosts its EBITDA to $12.1 billion US. Anglo American will be returning about $4.1 billion to shareholders via dividend. And of course, there's going to be a share buyback program as well. AB Inbev, one of the largest brewers in South Africa, reported a revenue climb of 22.4% despite the pandemic period, and EBITDA came in at 31.0%. Imperial Capital says it's buying the Lift Logistics Holdco in South Africa for 4.4 billion rand. The whole idea is that the DP World from Dubai is looking to buy the logistics company, but is making its own acquisition locally within the Southern African market ahead of the DP World coming in. That is now been concluded. The course is now clear for DP World to come in and take over. That's the story. Let's talk about the Zimbabwe's outlook on GDP and inflation coming through from triple digits within 2 years to double digits.
I mean, that shouldn't be surprising, really. I mean, we understand that. I mean, within the last 4 to 5 years, we saw how the Zimbabwean economy was really struggling, mainly due to rising inflation. In fact, it was beyond rising inflation; it was hyperinflation, and we saw inflation rising to around 500,000%. It's got to 200,000% and all that. So we saw the monetary authority coming up with different currencies just to combat inflation, and eventually they were able to get it right when they came up with a currency that was able to track movements in dollars, basically. And since then, we've seen inflation coming down drastically. More so, we've seen foreign investors now showing interest in the economy, because I mean, it looks more like we'll see inflation dropping to about 25% within a matter of months, and after some time you can see it dropping far below 25% as well. So given this view, and given the fact that the economy is now on the right footing, foreign investors are now showing more interest in the country, because it's considered more like a country that is just starting from the scratch basically. So there is a large room for growth in the long run, and that's why we have seen investors coming in, and that's why you are seeing a growth of about 7.8%. I mean, compared to Nigeria, the max we've done within the last 4 years has been 2% basically, and this is a country that is just doing 7.8%, and it's just about to start. Next year it can get to about 11-12%. So we should expect to see more growth in Zimbabwe basically, and that's mainly driven by more investment inflows into the country. When I say investment inflows, I'm not talking about FPIs, the hot money. I'm talking about foreign direct investments. Guys are ready to stay for the long run, and that's what will drive sustainable economic growth in Zimbabwe, which is a good one for them.
Great story there out of what is going on in Harare. A whole lot of rejigging. They also rejig their FX market, by the way, and the whole how the interbank market, which and they've been very strong in policing it. A whole lot of penalties and no nonsense there. A whole lot of riot acts to market participants. So that also seemed to be working. And the finance minister and the central bank governor were quite optimistic that the GDP, inflation, and others are on the right course. We always end the show in North Africa, and of course, as we expect, Egypt is always grabbing the headlines, with Misr Chemical Industries posting about 133 million local currency in full year earnings for 2020-2021. Bank Misr BM lease signing 700 million Egyptian pounds midterm Islamic facility under the non-interest financing. Libreville says it's closed a new bond issue of about 800 million dinars in Morocco. And Tanja Medical Group buying 35% stake in Masra of Mahok. Quite a whole lot. From Monday, August the 2nd, the Egyptian stock exchange will be rejigging its EGX 30, adding at least about 7 more new companies. So keep an eye on that. What are you looking at starting from Monday, Luke?
From Monday, I mean, in the equity market, we expect to see more of mixed trading, really. I mean, looking at corporate results, it's been mixed across board. For the downstream players, we've seen impressive performance, mainly supported by improvements in margins, and that came as a result of increase in the prices of lubricants. For the upstream players, for Seplat, for instance, I mean, revenue went up, but profits actually came in lower than expected, even though it was an improvement from the loss they made last year. But given the fact that it came in less than expected, we might see more of negative sentiment on that stock. Then for flour mills too, we've started seeing flour mills and other consumer goods companies. I mean, we've started seeing the impacts of inflationary pressures on their books. So even though we saw like a significant growth in their revenue from about 150 billion to 200 billion, profits only increased from about 10 billion to 11 billion. So the growth in profits was very minimal, and that was due to cost pressures witnessed during the period. Same applies to other consumer goods companies. For industrial goods, I mean, their results were really fantastic. We expect to see more positive sentiment on those stocks. Then for the banking space, I mean, it's still going to be mixed. I think the major determinant for profitability among the banks will be the management of costs, and they are yet to release their results. So for now, I think investors are more focused on banks that are cost efficient, banks like Zenith Bank and GT. So we might see more of positive sentiment on these stocks, but overall, it's more of mixed sentiment across board.
All right. Thank you so much. Let's get together again on Monday, from Monday onward, when we get into the new month of August. Thank you so much, Luke Ofojebe, Head Equity and Research Analysis Team at Vetiva Capital Management, one of the licensed and registered securities and investment firm by the SEC. We appreciate your time. Have a great weekend, Luke, and have a great weekend, everyone. See you at the other side. Bye for now.